We are extremely close to having stablecoin legislation fully done in the US. This is a historical time for a lot of these great projects in this space. And of course, yes, I'm talking about Stellar when I do mention a lot of these projects, because we already know that Stellar is the home for at least 6 now confirmed stablecoins. I believe it's actually 7 or 8 that are coming to the actual Stellar ecosystem, including, of course, PayPal's USD. And this is actually very important at a time where we are this close to having stablecoin legislation done in the US. This is going to open up the stablecoin market in a big way, and it's actually going to really greenlight a lot of these great networks, like, of course, Stellar's, to get a lot more adoption and a lot more payments pushed through the network through these stablecoins. These stablecoins are a crucial piece for this entire space to grow astronomically. Why? Because stablecoins enable everything that we really wanted crypto to enable, including payments, DeFi, tokenization, you name it. Stablecoins are the powerhouse behind all of it. Why? Well, because stablecoins are extremely liquid, they're stable, number one, and on top of that, governments are now fully embracing stablecoins in a huge way. And once governments are embracing stablecoins and pushing stablecoins onto the big banks and enterprises, guess what? Now you're onboarding users as well, utilizing those stablecoins, which if those stablecoins are, pushed or fully launched on some of these networks, that means the underlying networks are also going to be adopted in a big way through these stablecoin initiatives. So I'm very excited about that. And let's dive on in. Let's actually start off with this one from Eleanor Tourette, which is saying the House officially received the Genius Act from the Senate yesterday afternoon. This was on the 23rd. It's now the 26th. We could have this fully passed through very soon. The date here, the key date to actually watch for was August 1st. That's actually going over what we've been hearing from Trump, which we'll talk about here in a second. But here we have some House members, including Majority Whip, are doubling down on packaging the Genius Act with market structure ahead of voting. Today, Steve Scalise told Wilkins that doing both at once is what the industry wants. It's unclear at this point what the plan of action is. I've reached out to the White House for comment. And here we actually have from Brendan Peterson, Scoop in PBN text, Majority Whip Tom Emmer says the House will vote on Senate stablecoin legislation if the bill is linked with market structure reforms. I expect the Genius Act has a path in the House so long as it's accompanied by the Clarity Act, Emmer said in a statement. And here we actually have from Punchbowl News, The Vault, Majority Whip Tom Emmer said the House would vote on Senate stablecoin legislation if the bill is linked with market structure reforms. Market structure is essential to any congressional action on digital assets, Emmer said. I expect the Genius Act has a path in the House so long as it's accompanied by Clarity Act. 2 House committees advanced the Clarity Act in June to change the regulatory structure overseeing crypto. This 2-bill push comes despite President Donald Trump's call for the House to pass Genius ASAP. And yeah, this is a very significant accelerated push on legislation in the US. Like I said, the US market is opening up in a big way. And this is what's really kind of putting a lot of focus on these utility networks, which we know are powering real world use cases that are going to accelerate with regulations. Because once we have regulations, it greenlights everything. All of the obstacles are basically removed completely. I mean, if we think about what's happened so far in 2025, we have a SEC crypto task force, which is greenlighting a lot of things happening around crypto. All of the major, lawsuits and, cases against crypto companies and crypto projects are now dropped, except for, of course, the Ripple one. But the overall market is opening up. The SEC is becoming more lenient. The government is now embracing stablecoins and stablecoin issuers. We're starting to see even more embracement of crypto itself to, be tied back to mortgages. I mean, this is a completely different environment. And on top of that, we have over here, I'm hearing Trump's message has sparked a flurry of calls from industry stakeholders to the Hill with questions about what his directive could mean for the passage of market structure legislation, which the House is considering moving alongside stablecoin legislation in a bid to get both across the finish line by Trump's own August deadline. And so it begins was one House member's reaction, because here we actually have from Donald Trump's Truth Social, he's talking about how they need to get this bill onto his desk. He's going to sign it immediately, and he doesn't want any delays. No delays, no add-ons. He wants to pass a clean Genius Act, and if we're thinking about this, right, he wants this done by August. if we see that market structure bill tied to this as well, we could have full-on clarity for crypto and stablecoins in the US by the end of the summer. This is a very big deal, especially for a lot of networks like Stellar. Like I said, 6 stablecoins confirmed, 7 or 8 at this point. We already know the PYUSD stablecoin is a big one. This is a US dollar backed stablecoin from a very prominent name like PayPal, massive giant in the fintech space. But also, when we think about the stablecoins that are already on Stellar, we know that there's already 2 US dollar backed stablecoins. And if we're thinking about, 2 US dollar backed stablecoins combined with PYUSD, that's 3 US dollar backed stablecoins. If we see stablecoin legislation passed in the US, Stellar's overall network could accelerate in a big way. And I'm not just talking about stablecoin market cap. I'm talking about the volume transacted on the network, the value pushed to the network, the adoption from the retail side. This could be getting very exciting very fast. And of course, when we think about that, right, we go over here to #StableSummer. This is what Danielle Dixon, everyone including MasterCard and Visa, is looking at how this technology can make finance easier for their consumers and their business. I don't think there is going to be a loser, but I do think that there will be shakeups, and ultimately the consumer is going to win. Check this out.
Let's bring in Danielle Dixon, CEO of Stellar Development Foundation. Danielle, always good to chat with you. I want to start with the ease of use question, because I think this is where really the rubber meets the road when it comes to consumer behavior. Consumers want to do what's easy. They want to do what has consumer protections, and that's credit cards. They want to do what they're rewarded for, and they're used to that when it comes to credit cards. Talk to us a little bit about the opportunity, though, that stablecoins present from a consumer perspective.
Well, if you think about now, and thank you for having me, if you think about where we are now in the blockchain crypto space, there's a lot of focus on ease of use for the consumer side. That wasn't the case 4 years ago. It is the case now. The wallets that people have built and businesses have built out there are really simple. So it actually is very easy to be able to leverage a stablecoin, sometimes not even knowing that you're doing that. And importantly, credit card companies are coming in and they're having relationships where you can actually use a credit card and then use your stablecoin through the credit card. So there's no conversion that you have to make. You can just deplete your stablecoin balance using your credit card. So I actually don't agree that there is a challenge with respect to ease of use. There was 3 to 5 years ago. There isn't today.
I just want to jump in. I know Shonali has a bunch of questions, but this sounds more difficult than swiping a card, then paying the bill at the end of the month, or paying whatever you can afford to pay. Going and filling up some sort of wallet, then keeping track of how much is in it so it doesn't get depleted too quickly. Like, that sounds more difficult from a consumer perspective. Again, I'm talking consumer behavior. We want to do what's easiest as consumers. Convince me that stablecoins are the right way.
Well, I think a lot of people use their Venmo to do exactly what you just talked about. A lot of people are using PayPal to do exactly what you just talked about. And that ease of use in leveraging stablecoins there is kind of the same. So I think what Emily said before in your last segment is that outside the US, this is actually going to take off pretty quickly. It already is. In the US, it's a little more complicated because our markets, we're just used to what we have to do here because it's very simple. But I don't think the ease of use of it is going to be the challenge and the barrier to entry.
I actually have a question in the exact opposite direction. And it's, you heard us
You're saying it's too easy, Shonali?
Well, it might be easier for big retailers, as we've been talking about, to maybe bypass the traditional financial system in some ways by going directly to stablecoin. How likely is that? Now, it's really interesting to see you work with a more traditional way payments company. PayPal has been thinking about stablecoins for a long time. But if you are Bank of America or Citigroup, how worried do you have to be that retailers might not want to work as directly with someone like you?
Well, I don't think that I think that what we're seeing now is this really nice combination of traditional financial infrastructure and the new technology. Everybody gets very fearful of this, and I think this has been the challenge that we've had for the last 10 years, is really getting people to understand it's just a tech stack. And so banks are actually really excited about leveraging this new technology. And I think if you look at PayPal entered the market with a stablecoin during a time when there wasn't the Genius Act and stablecoin legislation on the table. And they did it because it was actually very useful for their consumers, but also from a business standpoint, it makes a lot of sense. So I think you're seeing traditional financial infrastructure really move to the value of what this technology has to offer,
Wait,
which is
no.
exactly the move that should be made.
I guess what I don't necessarily agree with is that it's just a tech stack. Because if these are, yes, they're assets backed by dollars, but they're held differently than you would hold assets in a bank account. And that's the difference, isn't it? At the end of the day, these look a little bit more like money market accounts. So isn't that creating a different way for people to use money?
Well, so there's the U.S. Treasuries that are if you think about, like, Franklin Templeton has issued a money market fund on Stellar. They have that, and they have access to that to be able to build your wealth and to get the interest rates that you can get. With respect to stablecoins, it really is just about the velocity of the asset. So I actually think that it is very similar to holding in a bank account outside the U.S. because lots of folks don't have bank accounts that we're used to having. In the U.S., yeah, you're going to want a bank account, but you're also going to leverage stablecoins for ease of use and for the fees to be so much lower. It's super exciting where we are in the market right now, and I just love to see this kind of technology really take off.
Perhaps exciting for somebody like you in this position, maybe not so exciting for an established credit card processing company like we saw on Friday. Shares of Visa and MasterCard did move lower on that Wall Street Journal report that we've been referencing that says that Amazon and Walmart are reportedly looking at their own stable coins. Talk to us about who you see as the, I don't want to say losers, but there's no other better way to put it. Like,
right, who should be aware?
Yeah, who should be concerned with developments in stablecoins such as these?
Here's what I'll say on that. I think that Visa and MasterCard have been actually working with this tech stack for a while now and trying to figure out how they're going to make their move and leverage the tech stack. Visa's done a really nice job with respect to partnering with Bridge and Stripe and to be able to make those credit cards that I was mentioning before. MasterCard is looking at digital identity. They're all trying to figure out how they can use this technology to make it easier for their consumers and for their businesses. I don't think that there's going to be a loser, but there's going to be shakeups. And I think that this is good from the financial industry standpoint, because the consumer ultimately is going to be the winner, and that's what we want to see.
Stellar Development Foundation CEO Danelle Dixon, we thank you so very much. Of course, we're watching that stablecoin.
Now, one thing that I will say that she didn't say is that, yeah, every single one of these credit card companies are going to have their own stablecoin as well. Every single one of these financial giants in the traditional world are going to move on chain through a stablecoin. Some way, shape, or form, they're going to be adopting it. Why? Because they have to innovate or they will die. It's that simple. It's not, a thought process of, oh, I wonder if this is going to happen. No, it's going to happen. Why do we know this? Well, because, the stablecoin market today just continues to grow. We're at $2.82 trillion in monthly transfer volume. Retail is barely here. A lot of retail focus has kind of dropped off ever since going back to January. The market cap for stablecoins, $240 billion, hit $250 billion just recently. The holders just continues to grow. The overall monthly active addresses continues to grow. This market is ripe for disruption, and it's ripe for a ton of growth. And I do think that we are going to see a lot more adoption, a lot more stablecoin launches from some of the biggest players out there. And this is just a market and an ecosystem that I foresee hitting trillions of dollars in not just market cap, but I also think that the monthly transfer volume could significantly increase. I mean, if we're at almost $3 trillion today and we barely have mass adoption, we don't even have legislation in one of the biggest economies in the world. I mean, think about how high the monthly transfer volume will be and what some of these networks could look like in, say, a year or two from now. Because again, as monthly transfer volume just continues to rise and more transactions start to happen on these networks, more value started to transact on these networks as well. DeFi protocols start to get a lot more adoption. Institutional DeFi becomes a reality. Big banks are diving on in. I mean, these networks could explode in overall volume and value and users, which will, create a significant network effect. So the future is very bright, especially for a lot of these great networks. And I do think that Stellar is at the forefront of this. I think that we need to be paying attention to Stellar, especially considering the fact that there's already so many stablecoins already launched on Stellar. It is stablecoin summer. Stellar did coin that term. I do agree. I do completely agree. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, turn notifications on because of more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this is Nick. Thanks for watching. Peace out.